Hi, in this video, we are going to see all the information that you need to invest in gold. In the beginning of this video, I would like to make two requests. The first request is, please watch this video till the end. And the second request is that if after watching this video, you find value in it, may I have the advantage of having you as a subscriber for my channel. Welcome to FINDAS, a place where you can be financially bindas. This is Samir Machwe and I am going to help you create abundance in your life. We Indians have a very emotional relationship with this yellow metal, gold. We have a special relationship especially with the physical gold and the ornamental gold. Our consumption is very high. We have imported in excess of 2000 billion rupees worth of gold on an average in the last 5 years. Gold is believed to be a very liquid asset. Over longer periods of time, it has also the ability to beat inflation. So gold becomes an attractive investment avenue also because of the status that is attached with the gold ownership. The safety, liquidity, and the ability to beat inflation makes gold a good investment for a conventional investor. The gold also has an inverse relationship with equity markets. Hence, if anyone wants to buffer the volatility, gold is a preferred choice. Gold also performs well in times of global crisis, financial uncertainty like the one we are facing today because of the coronavirus or the COVID-19 pandemic across the world. In recent times, the investment in gold has become much easier and much safer because the awareness of investing in gold through non-physical means has grown largely. When you invest in gold in the non-physical form, you have to necessarily do this through the gold-related mutual funds. Let us now see how one can invest in gold. Besides physical form, there is also the availability of the non-physical form of investment, that is through the gold-related mutual funds. There are three basic categories of gold-related mutual funds. The first is the gold ETF or the exchange traded fund. As the name suggests, these funds are traded on the exchange. The underlying asset in which these funds invest is the 99.5% purity gold sourced from RBI approved banks. These funds are also allowed to invest up to 10% of their investments in debt. Since the investment is directly happening in gold, the returns that these funds deliver are in line with the gold prices. The big advantage of the ETF is that they offer liquidity since they are traded on the exchanges. Second advantage of investing in gold through the gold ETF is that you don't have the risk of theft and you also don't incur additional cost in preserving the gold. Many times in the physical form, one keeps the gold safe in the locker and hence has to incur the cost of paying for the locker rent. So these costs are not here. The gold is held in a demat form or the paperless form through the gold ETF. The next option is the gold mining funds. Instead of investing in gold, these mutual funds invest in companies involved in mining of gold. Hence, the performance of these funds depends more on the performance of these companies rather than gold. Hence, this may not be a very attractive investment option. The third option is the gold fund. It is basically a fund of funds investing in the exchange traded fund. The advantage of investing in gold fund is, first, the returns are in line with the gold returns. Second, you can invest in these funds conveniently through a SIP mode. You don't need a demat account to invest in a gold fund. Typically, 1 unit in a gold ETF is equivalent to the price of 1 gram gold. You are also allowed to convert your ETF units into physical gold provided it is all worth more than 1 kg of gold. So if you are planning to invest in gold, there are a few things that you should know. The first is that gold is supposed to give good returns, especially in times of uncertainty. Currently, we are going through this crisis of coronavirus across the world and there is a good amount of uncertainty in the air. Hence, most people think that investing in gold would be a good decision. However, please remember that such crises are often short-lived. Once such atmosphere of the crisis dies down, people move towards other assets in search of higher returns. Also, this COVID-19 is a very unique crisis wherein the liquidity of gold is also challenged because of the lockdowns. Considering that there is a major lockdown everywhere, gold cannot be sold, especially physical gold cannot be sold in the market. It will become more difficult to get rid of physical gold in these times of lockdown. Hence, the liquidity is challenged. Hence, it is prudent to hold gold in the digital form or the paper form rather than the physical form. The second point is gold is often viewed more like an insurance or a hedge against economic shocks. Gold is not like other assets, say stocks or bonds. If you purchase stocks of a particular company and that company does well, there is a very high chance that you would be rewarded in terms of increasing valuations of your holdings because you are a part owner of that business. If you invested your money in bonds, you will end up having some interest income coming out of the lending borrowing cycle that bonds are involved in. However, the prices of gold are purely dependent on the supply and demand. Hence, unlike stocks or bonds, there is no real value creation, and because of this, we can view gold as a more non-productive assets unlike stocks and bonds. The third point to note here is that it is recommended to limit your allocation to gold as an investment asset to a maximum of 5 to 10%. Even though gold offers a good stability in times of crisis, a higher allocation can act as a drag on your overall return on investment. Hence, if you are including gold in your asset allocation, please make sure you do so with a proper expert opinion. The fourth point to note is that almost every AMC offers a gold fund. Which is the best fund for you? What are the kind of returns that you can expect out of this? And how you are actually able to invest in these funds? To know this information, please get in touch with us. So in the end, let us conclude. Every investment has its positive and negative side. Of course, gold surely qualifies to be a part of your portfolio with an allocation of around 10% to the maximum. If you are investing in gold, you should have down-to-earth expectations on the return on investment. It is always better to invest in gold through the non-physical form, that is through the mutual funds. This reduces your risk of theft unless, of course, if you want to show off your gold in forms of ornaments. I hope this video gives you enough information to make a decision on whether or not you should invest in gold. If you need more such videos in future, please do subscribe to this channel. Thanks for watching and I'll see you next time.